Hey, Bulls and Bears, you're watching Bull Boom Bear Bust. My name is JJ. Millionaires are afraid. Yes, even millionaires are afraid. We're going to talk about what that means here in just a few minutes. But first of all, the war on inflation. Let's talk about what's happening here, what the Fed just signaled, I think. And let me know what you think about this. But here's what I think. The Fed, first of all, kept rates steady, did not increase the rates, but yet there's supposed to be a fight against inflation happening right now. So wait, something doesn't add up here. There's a fight against inflation, and actually inflation took an uptick in the last 2 months. But yet there's supposed to be a war on inflation. So with inflation going back up or accelerating, the Fed now decides to pause the rate hike. Doesn't make any sense, does it? So what are they afraid of? What do they see out there? What's going on? Well, I was listening to a podcast earlier, and I think it was summed up very well. This was Peter Schiff, and he says the war on inflation is over and inflation won. It's a good way to sum it up, right? The war on inflation is over and inflation won. Obviously, if they were still wanting to fight inflation, they would have just went ahead and raised rates again, right? So I think they see, talking about the Fed here, I think they see danger is not just on the horizon, it's already here. Look at the bond market, look at the yield on this 10-year treasury right now. We're back up to close to where it was a couple weeks ago. Well, actually, correction, a couple weeks ago, the mortgage rate ticked up, then it went down, but now it's back up to where it was a couple weeks ago. But as far as the treasury yield, the 10-year treasury, you have to go back to summer 2007. Summer 2007 to get to these levels. Today closed out at 4.35, basically 4.35. So the highest we've seen since July 2007. So I think that is, definitely spelling out danger. And we knew from day one that the rate hikes weren't actually going to do what they were supposed to do, because if rate hikes were the solution, if they were going to fix the problem, then they would have just went from rock bottom or nearly zero right up to 7%, 8%, whatever it takes, right away. So the problem with doing that is you implode all these bubbles. And of course, nobody wants that to happen. Well, some people want that to happen. People waiting on the sidelines with cash want that to happen. They want the bubbles to burst. Many want to be home buyers that have been saving up, or at least trying to save up. And I say trying to save up because it's very difficult to save up right now in this environment. But people were trying to save up for a down payment on a home, only finding themselves years later, after the bubble was supposed to pop in 2020, 2021, 2022, only to find out that unaffordability is even worse now. So pretty heartbreaking for a lot of wannabe home buyers. And I've said this before, if I wouldn't have bought back when I first moved out to San Diego here in California, moved from Michigan, I would have never been able to participate in the housing market. So I just got lucky timing, and kind of rode the wave up and down ever since. But if you know the up and down, if you know the boom and bust cycles, definitely helps. The scary part about this boom cycle or this bull market is it's not bursting. The bubbles aren't bursting, right? Prices are still elevated. And it's not just the assets that are elevated now. We see the cost of living elevated wherever you look. And that even shows in millionaire sentiment, right? So let's talk about this next here. Recent article out of the Mail. Even millionaires are afraid they will outlive their retirement savings. Wealthy Americans are concerned about their retirement. The new survey shows millionaires felt like they would need, get this, around $3 million to comfortably retire. $3 million. So even with $1 million or $2 million, these people in the survey, these millionaires, are not comfortable. And when you retire, you're supposed to be in maybe the fourth quarter or approaching the fourth quarter of your life. You should be comfortable with $1 million, considering you're 75% through your life, probably. If you retire at the age of 65, as an example. Wow. The average American thought they would need 1.27 million to retire later in life, right? So even millionaires, let's say somebody in their 40s and their 50s, no way, they're afraid to retire. But even people later in life, people that are at retirement age, still feel they need nearly $1.3 million to retire, right? So that should give you a picture of how people are feeling about the cost of living right now. And it's not looking like it's going to get better. Oil stayed above $90 and $90 a barrel, and it's just going to get worse, I think, because we have these nations out there. A lot of the OPEC nation, remember, the OPEC nations for the most part are in the BRICS alliance, and these are the biggest oil manufacturers in the world. It's no longer the United States, and so I think they're punishing the United States. They're cutting production, and I think they're just going to charge the U.S. more for oil, especially now with de-dollarization happening. They're already going outside of the dollar. The dollars they're going to accept for oil, I think that's going to drastically change, and it's going to really make prices go up here. I went by a gas station earlier, $5.99 a gallon here, my neck of the woods here in San Diego. You can get it at cheaper stations for a little bit less. What's that station? Arco. Arco was like $5.67 or something like that. Really bad, folks, really bad, and it's just going to get worse. This oil crisis, and this the cost at the pump is just the tip of the iceberg, though, because there's a lot of other things happening. And as we see out of this article, even millionaires don't feel comfortable. And here's something else that I thought was pretty interesting out of this article here. The average amount the American adult has saved for retirement increased by 3% to $89,300 from $86,870 in 2022. So only a 3% increase in a year. That's not keeping up with inflation either. So people are not saving enough for retirement. And I think part of that is we recently discovered a lot of people have been draining or taking money out of their retirement accounts to keep up with the cost of living, right? So I think that's one of the reasons why it didn't go up more, because you have to factor in the negative of people taking money out of their 401k. So if people had not done that, maybe it would have went up more. Maybe the average savings would have been 5%, 6%, 7%, who knows? But 3%, basically you're not keeping up with inflation either. And we're not talking about the CPI inflation. We're talking about real inflation, which factors in all the things that people have to pay for that CPI number doesn't account for. Now, with that average savings, somebody retiring at age 65 would have to live on $40,000 a year. That's very difficult to do nowadays. In California, that's very unlikely unless you're living in a cardboard box. Yet the BLS, that's the Bureau of Labor Statistics, they say the average citizen age 65 years or older is going to need closer to $52,000 per year, but that depends on where you live too. In California, that's minimum wage, basically $52,000. Very interesting. So what do you think about this? To me, it just clearly shines a light on how really this war against the cost of living, or the fight against the cost of living, doesn't make any sense, right? So why would they skip a rate hike when inflation just started accelerating over the past 2 months, right? So it doesn't make any sense unless they're afraid of something. What are they afraid of? The yield spiking, the housing market coming down, the housing bubble finally bursting. Are they afraid of that? Well, it needs to burst, and they need to do a lot more if they really want prices to come down, especially rents and housing. First of all, with rents, you have to stop the greedy big investment companies. In some cities, there were 40-something% of home purchases were from investors last year. And people said it was actually slowing down, or that investors are backing away from the housing market. Not very much, maybe a little bit, but in some cities it's pretty bad. And actually 1 in 4 properties overall, I just read, is bought by someone that does not want to live in the home / an investor. So people with big money out there, big corporations, the hedge funds, the Blackstones, Invitation Homes, companies like that, are still scooping up a big chunk of the homes. And you wonder why, even though mortgage rates are so high and the average person is priced out of the housing market, you wonder why homes are still getting scooped up so quickly. That's because you have big corporate investors. And they're just looking for yield. And if they feel like they can raise the rents and people are still going to pay it, then they're going to go ahead and do that. So once rates get so high, though, if rates get higher, what that does, that entices big money to just park their money and get the bigger yield, maybe 5, 5.5, 6%. If they go up even more, maybe 7%. And that would be something to make investing in real estate look less ideal. Because if you could just park your money and get 6, 7%, you're going to be less willing to buy a property and keep it up with the upkeep and all the other costs that go with owning a property, raising rents, hoping that you can raise the rents and have the tenant still pay it, because as we saw in 2020, if things fall into chaos, then they're going to put a moratorium out there, and all of a sudden you can't collect rent as a landlord. Now, the big mega companies, they have no problem in that situation because they can just raise the rent on thousands of other properties they own. But a mom and pop landlord or a small fry investor that only has maybe 2 or 3 properties, they can't raise the rents enough on the other tenants to make up for 1 or 2 people that are not paying the rent. So again, the moratorium's advantage goes to the big monopoly real estate companies, right? The mega companies, um, the hedge funds, investment firms. So it's very counter to what the intent is, right? The intent is to help people by canceling rents, but it only hurts the little guy and helps the big monopolies get even bigger. Why do you think all the big companies that invest in real estate have gotten even larger since 2020? They've raised their rates even more. So they've gained more market share, less competition. That's why you're seeing skyrocketing rents, folks. So this is a mess for a lot of people. I feel sorry for people that are, living paycheck to paycheck. And, I might be in that category in the next few months, depending on what happens, right? I could lose a job. I could have a severe illness, um, an accident. It takes one car accident without insurance to wipe out most people. If somebody's injured, a few days in the hospital, you're talking hundreds of thousands of dollars in a very short amount of time, right? So be cautious out there, folks. Hope everybody liked this report. Oh, there goes my bug zapper. Sorry about that. Still doing videos from my garage, and yes, the mosquitoes are bad this year. Even where I'm at in Southern California here, San Diego, mosquitoes have been bad. But I was going to wrap this up here. I was going to say, what do you think about this? What do you think about the Fed pausing? What do you think about the millionaires afraid to retire even on $1 million? And a lot of them that are in their 40s, 50s, thinking they'll need $3 million to retire. Pretty wild. Also, have they given up on the war on this cost of living? You guys let me know. Thanks everybody for watching. Keep stacking peace.